This is the 10-Minute Contrarian Podcast. This is VP. We are a solutions-based podcast, diving into the world of contrarian investing and alternative finance. You can find us hosted on the No Nonsense Forex YouTube channel, NoNonsenseForex.com, and podcast players everywhere. Episode 221 is brought to us by Bybit. I haven't talked about Bybit copy trading in a while. How many of you are leveraging this? There are big opportunities here. If you're not great at trading, you don't really have to be. There are people on Bybit with long-established winning records that you can just simply follow. A lot of people do this and then just set it, forget it, and let them do all the work for you. On the other side, you can become one of those people and earn money by the amount of people who follow you. Now, Bybit isn't the only company who does this, but if you run them alongside the other big boys in the space, you will see the advantage I'm talking about, and you will also see that with Bybit membership, simply has its rewards. Links in the show notes. It is the 10-Minute Contrarian Podcast, and it is finally here, everybody. It is Fed Week, and not only is it Fed Week, but things are actually expected to happen this time. Fed Chair Jerome Powell remains really the only holdout in terms of people who want to keep rates where they are, which is quite high historically. But it really seems like everybody else, especially President Trump, wants lower rates, even though you really wouldn't lower rates unless you needed to stimulate the market. And I don't know if you've seen the charts lately, but the market is already quite stimulated. We keep hitting record highs. Yet there's still this huge call to drop rates. And not only that, the Fed is expected this time to actually drop rates by 25 basis points, with the expectation of dropping them even further down the road. Now, we will get to the significance of this more towards the back half of the episode, but let's go over a quick primer here, because some of you may know, some of you may not know, but we all need to be on the same page here. We all need to understand how significant this is on the global stage and how it relates to our money. It's like anything. You don't need to go super deep into these things. Just have a base working knowledge of what they are and what they do. And this alone will already get you ahead of 99.8% of all humanity. I mean, simply listening to this podcast will already get you to that level. But you still need to understand what things are and what the hell you're doing. So let's do a quick overview here. Now, who benefits from high rates? Well, the answer is really not most people. You only do it to get inflation down. And Powell has had his reputation soiled by inflation during the Biden administration. It is the Fed's primary job to keep inflation down, and he did not do that, mainly because of all the dumbassery that happened back in 2020 on many levels, but especially on the financial level. I keep telling this story. I remember when they were injecting all of this money into the bond market to stimulate an economy that was falling and falling fast. And I'm over here like, why do you need to do this? We are already, in 2020, we were already overdue for a recession. And we had the perfect black swan scapegoat. What the hell are you doing? Why? And this is where conspiracies, rightfully so, run wild, because it made no sense. There had to have been some very powerful people in his ear telling him to do this, because we would do these things called bazookas. They actually called it this. $1 trillion, sometimes multi-trillion dollar tranches of money being injected into the economy, well, the bond market, which then ends up going into the economy, just to keep it from falling. And it seemed like everybody was totally supportive of this. My guess is because this thing came out of nowhere, and nobody, and when I say nobody, I mean very powerful people, did not get the time to prepare for it like they normally do, because they usually see this coming before anybody else does. Again, if I'm putting my conspiracy hat on, it's because they're the ones who engineer the whole damn thing. But they couldn't do it this time, and they didn't want their investments going down too. No, just a thought. But this is why Powell has kept rates high, and it really doesn't benefit hardly anybody. It does benefit bondholders, of course. I am technically one of them with my SGOV holdings. I think a number of you out there are doing the same thing. You know, whether you're holding treasuries or bond funds like I am, or anything else out there, you are benefiting from this free money at very high rates. And people all over the world are doing the same with the United States dollar. But higher rates, in a lot of ways, keep economies restricted from really blossoming and becoming great because it all comes down to lending. Banks in particular, banks don't make a whole lot of money when they don't lend. And at these rates, there's not a whole lot of lending happening. But when rates go down, and there is, all of that borrowed money goes back into the economy and things get going again. Also at lower rates like homes and automobiles and things like that, people can afford to buy things again. And so, overall, it really ends up being a win-win for everybody, for governments, for banks, for citizens. And it really doesn't hurt the United States dollar because historically, at least, it has been one of the last currencies to cut rates worldwide. So even though all these people and banks and institutions and sovereign nations who hold United States dollars, they're not going to get rid of them just because rates dropped, because rates have dropped everywhere. The United States dollar is still, as far as interest rates go at least, the prettiest pig in the slaughterhouse. And when you have all of this new money churning into the economy, well, then markets go up. And as we have seen with our handy little St. Louis Fed chart, I'm not going to link it down below. You should already have it. For those who don't, go to Google, type in St. Louis Fed interest rates. It's a very common chart. More people should have it. We'll talk about that in a minute, but we have it. And you will see when rates begin their cutting cycle and when rates begin to go down, this is typically very good for markets. Now, before I talk about what exactly goes up, let's talk about the downside from all of this too. If all of this prosperity was as simple as cutting rates, well, then we would just do that all the time. But there are very obvious drawbacks, especially long term. Drawback number one, anytime there have been rate cuts, especially in the last 30 years, quantitative easing has come along with it. Now, quantitative easing itself is not printing money. It just simply accelerates the process. It's really the banks lending more money part that is the printing. I'll explain. So, as you should know, if you don't, I'm going to tell you now, banks don't lend money one-to-one. If you deposit $100 in the bank, they're going to lend out $1,000 worth of your money. Now, how is this possible? I only gave them $100. Well, it's because of this little thing we've had in the United States for a very long time, and other countries have it too, called fractional reserve banking. Should it happen? You could argue, but overall, not really. It has made the countries who use it awfully prosperous. It has made your life, if you live in one of these countries, pretty great. But there are drawbacks long term. In particular, you have money that doesn't really exist. And that is extremely inflationary. And we have talked on this show just how inflationary things have been in the last 5 years. It has been scary how much value fiat currency has lost in the past 5 years alone. So normally it's not the actual printing of more money. Now, what was going on back in 2020, that was actually printing money that did not exist before and just injecting it right back into the economy on top of the zero interest rate policy we had had up until that point, which was just banks lending money that wasn't real. So that this crazy cocktail of two things happening is why the last 5 years have been so rough on our money and why nobody can afford anything anymore. And this is why people who hold cash, and almost nothing but cash, have had it really rough, and people who hold assets, whether it's safe haven or equities, have done extremely well. Now, you can go on and on all day about the fairness of this, but that's not the market we trade, is it? I stole this phrase from Rob Reinhold, but you have to trade the market in front of you. And that's what we do here at the 10-Minute Contrarian Podcast. We invest based on what the market is, not what we want it to be. Hopes and dreams do not make your account go higher. Hopes and dreams do not keep you and your family safe. You have to be fully literate when it comes to what the market is doing so you can properly prepare for it. Now, what exactly are we preparing for? Well, two things, really. I wish it was super black and white here, but there are two very distinct and very opposite way things could go here. One, as we just spoke about, the markets are probably going to go up, and all markets. I'll explain why. One, stock market should go up because it always goes up when rates start dropping, and this is what everybody's getting excited for. Again, the stock market in the United States is already going up a lot. It is at record highs. It keeps making new record highs. But as it pertains to the stock market, we're in a period of absolute blow-off top excess, and you should expect that to keep going for now. Look, we get defensive here on the show. We play offense and defense. But there are people out there, I'm kind of looking more at the gold bug community, who do nothing but play defense because in their world it's always about to crash. And let's say in the last 8 years or so, even though they play defense, their money has doubled, which is great. But the problem is when you have markets like this, you are missing out on, we're not talking meme coins here. We're talking actual strong companies. You're missing out on 5x, 10x gains. And in the grand scheme of things, if you really, really zoom out, when you have these big bull markets, you need to take advantage of them at every turn. Because most people, less so us contrarians, but most people end up giving a lot of that back when the market turns downward. So you got to get it while the getting's good. Now, things like Bitcoin and gold should also continue to go up. Now, why is this? One, because of QE and perceived money printing. And when I say perceived, it's not the Jerome Powell meme of money coming out of the printer, but it more or less is because of what the banks are doing, like we just talked about. And if this is happening, whether it's physically coming out of a printer or not, this is still making the dollar more diluted and therefore weaker, which means your anti-dollar plays also go up. Whether that's gold, whether that's Bitcoin, whether that's equities. But things like gold and Bitcoin will also go up because of what we also know about that handy little St. Louis Fed chart. If you've never seen it before or you haven't looked at it in a while, go look at it now. You will notice that the recessions are shaded in gray. Every single time since the early 1980s when inflation was out of control, and it was so out of control you can't even really count that. But ever since then, for the past 40 some odd years, every time rates drop and continue to drop, that has been the signal for a recession in the United States. And very few people knew this before, but they know it now. But VP, I don't get it. If rates drop, that's good for everything that's not the dollar, and markets should just continue to go up. Why does that cause a recession? So we've talked about this before, but I need to bring it up again. Again, because some people are new, and also we just need to be reminded sometimes. It's not the dropping of rates that causes the recession. It's all the time we had in the past with higher rates. And there is a lag effect. That's reason number one. Reason number two is more conspiratorial, but I think it has a lot of legs, and that is, I have always thought, and it makes sense if you look at the chart, that the people who run the world, they know a recession's coming. They have positioned for it, while most of the world has not. And since they already know it's coming, you may as well get a head start on dropping rates so you can then get a running start on the actual recovery. Because remember, everything has a long lag effect. And what really steelmans this whole conspiracy theory of mine is the fact that look at every recession we've had. They don't last very long. And the reason why is because you have done the stimulating of the economy with lower rates progressively ahead of time. So you don't need to panic lower. They're already there. Money is already coming into the system as it has been for a while, and that is why they do it. They've done it every time. So how is this theory wrong? It's not. Lowering rates initially makes the market go up because Wall Street gets all excited and Wall Street doesn't really invest long term. And you have that Santa Claus effect where everything is kind of brand new and you're getting all this money for free, and that starts going into the economy, and it makes things go up initially. But the whole reason this was done is because they know something's going to happen, and there's always a reason. There's always a black swan, and they seem to always know what it's going to be before we do. What's it going to be this time? Could be anything. There's people grumbling about war, like a world war happening. But at the end of the day, it normally catches us completely off guard. The dot-com crash in 2000, the housing crisis in 2008, the virus in 2020. All of those things caught almost everybody completely off guard. So sitting around saying what this black swan might be is just not helpful. What is helpful is prepping for this regardless of the outcome. Solutions time. How do we plan for a market that's probably going to go up initially but then has a really good chance of crashing soon after? Well, there's a reason why I have been putting out the episodes I've been putting up recently. In particular, the one called My Entire Portfolio Allocation, which I think was not even 2 weeks ago. I think, not financial advice, I'm not officially allowed to give it to you, but I think having defensive assets that still go up a lot is a really good idea, especially during times like this, which is why half of my entire net worth is in a combination of gold and Bitcoin. Bitcoin is riskier. It will drop more in a recession, at least initially, most likely, but it also has a lot more upside. It is also finite, which I don't think enough people, one, really understand, two, value the way they should value. And this, to me, mitigates the increased downside risk. As far as the other half of my net worth, half of that is assets, stocks, crypto tokens, which are more or less the same as stocks. These are tech companies that just happen to be listed on the blockchain and not the NASDAQ. Although with the ETFs out there currently and in the future, a lot of these blockchain companies are going mainstream and are now on both markets. If these things are going to continue to go up, I am going to take part in them. One, there's no reason why I shouldn't. Two, these will be the main things to drop in a recession, but it is only 25% of my portfolio, and I do plan on taking profit at the time. Profit all the way, I'm not sure yet. Probably not. I will probably just do what I've been doing, and every time we do see a drop in price, that's more or less just an opportunity to buy more, which, by the way, listen up, you should be ready to do when recessions happen. They don't happen often, so when they do, you need to be positioned to take advantage, which is why the other 25% of my net worth is cash. When recessions happen, most people aren't going to have any cash. And even if they did, sentiment's going to suck so bad, they're not going to want to invest in anything. Because for the first time in forever, their cash actually became valuable. Well, what they don't know is you're supposed to exchange valuable things for invaluable things. Sell high and then buy low. But they're not going to want to do that. And that's where we come in. Also known as the Great Wealth Transfer. The super rich play this game every time it happens. But the cool thing is, everybody can play this game if they want to, and that is how you move from one income bracket to the next. Or in some cases, from one income bracket to 2 or 3 above where you are now. You just have to, in the midst of all of this emotion, be able to play the rich people game instead of the poor people game. And I did an entire episode 2 weeks ago on how I am positioned to do just that. Now, I have also told you how the cash I have is yield-bearing, and some of those yields are going to get lower when rates drop because that's how yields work. So what am I going to do when I'm not making as much money on my cash as I was before? Well, that's going to be its own episode in the future. I wouldn't worry about that now. If I were you, what I would concern myself with is understanding that we have finally arrived, or unless anything really crazy happens this week, and Powell continues to say, okay, screw all of you, I'm keeping rates exactly where they are. Just know that we have finally arrived at that point in the Fed chart where things are starting to go down. They did it once right before the election, which was very suspicious. So we have already peaked in the past. But what we're really looking to see is that continued momentum downward in the rate cutting cycle. And that is likely going to begin this week. We have had a long, amazing, cocaine-fueled party in the investment world. And the cops haven't arrived yet, but a handful of people, for the first time all night, are finally leaving the party. It's officially time. Like, we're here, contrarians. We're officially here. If you've been sitting on your hands and not making moves this entire time, let this be your signal. Because historically, there has been no brighter signal than this. So while the rest of the world la-di-da's around like nothing's happening, you need to make moves even if they seem a bit crazy to you, because I'm telling you, you're going to see that we weren't crazy. We were just early.